All right, today we're going to talk about education credits. Now, you all should be on page or in tab J, and specifically on pages J2 through J3. Give you a moment to pull that up. In that section, you can obviously turn it sideways. We are going to cover, and these are the columns that we are going to cover. Column 1, scholarships. Column 2, opportunity credit. Column 3, lifetime learning. Column 4, student loan interest. Column 5, tuition and fees. And then column 1, 2, 3, 4, 5. Column 8, education exception to additional tax on early distribution. What that means is you can draw an X through Coverdell, QTP, education savings bond, employer provided educational assistance, and business deduction for work-related expenses. So we're going to concentrate on the first 5 columns as well as education exception to early distribution, which we've already actually covered, but I just want to reiterate it. So the majority of what we're going to talk today about is American Opportunity Credit and the Lifetime Learning Credit, how to choose between the two of them. Those are the majority of credits for education that people qualify for. When we look back at our tabled information, and you look at column 1, scholarships, fellowships, grants, and tuition reductions, we covered that already. I'm including it here as well because it's fair game. It's in this section, but I want you to review that as well. Remember that those payments are for grants, and if you're given the difference between scholarships and grants, and we talked a little bit about graduate assistance and things like that. So I want you to review that information kind of mentally as well and in your textbook. So we're going to focus right now on American Opportunity Credit and Lifetime Learning Credit, which is in columns 2 and 3. What types of qualifying expenses those cover and which people are eligible to obtain each. So when we talk about those qualified expenses, and again, if you have your tabled information open here, you can find out what types of expenses are covered under row 3. What expenses qualify besides tuition and required enrollment expenses? You can notice that if you're looking at American Opportunity and Lifetime Learning Credit, you have under American Opportunity, you have course-related books, supplies, and equipment, and under Lifetime Learning, you have amounts paid for required books that must be paid to the Educational Institute are required fees. Let's just give you a brief overview of the difference between these two and why you're going to see differentiations between what's covered and what's not. If I had to describe each one of these in layman's terms, I would say that the American Opportunity Credit is for parents, generally parents, to be allowed to take a deduction for their students for being a college student. We're going to talk about the stipulations on how old you need to be and things like that, but it's generally for students in a post-secondary undergraduate degree program. You guys. The Lifetime Learning Credit is for any person that wants to better themselves in their job. Say you're in a job and your boss states that, wow, you really need to get a better handle on Excel if you're going to be able to be successful here. And let's just say that you go off and you get a certification in Excel, and you had, of course, some expenses for that. That would qualify for the Lifetime Learning Credit, assuming you paid for that out of your own pocket. Of course, if your employer paid for that out of their pocket, you're not going to be able to take any Lifetime Learning Credit because you didn't have any out-of-pocket expenses. So qualifying those two really is kind of based on where you are in life. American Opportunity Credit is those first 4 years of college. Lifetime Learning is just that. You're learning through your life and you have expenses that you want to pay for to better yourself. So those qualifying expenses, you can see those differences in row 3 there. People that cannot take this credit. So we have people conditions, disqualifying conditions are down here. 1, 2, 3, and 4. If you can be claimed as a dependent on someone else's tax return, that means that you are not permitted to take this credit, any credits. Does it mean your parents can't claim it? No. Just means if your parents are claiming you as a dependent, which we learned about way back in January, what qualifies someone to be able to take a dependent. If you are being claimed as a dependent on someone else's return, your parents will take this credit, not you. If you file married filing separately, this is the only way of filing that you can't take this credit. And we've seen that in other types of credits as well, along with the one that here, a non-resident alien. So if you are a non-resident alien, you are not allowed to take this credit either. Last one I wanted to cover here is this AGI, and you can find this in your table as well. So on J3, in that row, you have in what income range do benefits phase out? You can see that for the American Opportunity Credit, that is 80 to 90 or 160 to 180 for joint, and for the lifetime learning, it's 58 to 68, and then 116 to 136 for joint returns. So they start to be phased out at that point. Let's talk about those dependents. Now you're going to have to flip around. So now I want you to be able to focus on page J9. On page J9, I'm going to give you a second to do a brief overview of that information. Notice in there, you were under the age of 24. Were you over the age of 18? Were you a full-time student? Were you 18 at the end of 2019? Was your earned income less than 1/2 of your support? That's a dependent situation. Was either your parents alive at the end of 2019? If you say no here, you do not qualify to claim the part of your allowable American Opportunity Credit as a refundable credit. And we'll talk about which part is refundable and which part is not refundable. And are you following a joint return? If you say yes, you do qualify. And of course, if you say no, you do not. That's a great way to be able to determine whether these are considered dependents and who qualifies. So that's a great page, J9, to review as well. Generally speaking, the American Opportunity Credit is for dependents, parents, and the Lifetime Learning Credit is for anybody at any age. Let's talk about those qualifying expenses again. Flipping back to your table on J2 and J3, you can see what types of specific things are covered. Generally speaking, you have room and board that are not covered. So if you look at what expenses are covered, you've got books, supplies, equipment there. You notice that under the Lifetime Learning Credit, it's a little bit more specific. The amounts paid for required books that must be paid to the educational institution, et cetera, are required fees. So anything that has to be paid directly to the institution. You'll receive that information on Form 1098. Let's pull up a 1098 form here and look what it is. Form 1098 is given to you or your parents for information from the college or university that tells how much tuition you paid. When you have a tuition amount, that is going to be in box number 1. The filer's name is in box number, in the top left-hand corner there, and that for you guys would be Ashland University. Your name would be under there, your address, and so on. So if you want to claim American Opportunity Credit, you will have should have received a 1098-T from Ashland University. If you took a class elsewhere last summer, let's just say, and you transferred it in, you will have also received a 1098-T from that university as well. Box 5 here shows an amount that is in scholarships or grants. We already learned scholarships and grants are not allowed to be deducted for tuition. So a great example, and I'll tell you this one as well, is on the bottom of page J6. Since I asked you to already read through this section before you come to class and watch this video, hopefully you will have seen that already. So this example of Bill and Sue is a great example, and we're going to go through it right now. So we have on J6 at the very bottom, we have Bill and Sue are eligible to claim the American Opportunity Credit for their daughter who is in college. They've gotten this form, a 1098-T. They have box 7, wish this was a fillable form, but it's not. Box $7,000 in box 1, $3,000 in box 5. So that means they have $7,000 payments received for tuition from Ashland University in box 1. Then they received a scholarship or grant, a Pell Grant specifically, and that's in box number 5, the one I'm talking about here. So when you interview these people, Bill and Sue, you determine that $3,000 was paid in September for the fall, $3,000 was paid by Pell, and $4,000 was paid by loan proceeds. So of the total of the $10,000, it's split up that way. They paid an additional $500 for books in 2019 as well. So as you're thinking about this, you should be thinking about, okay, they paid a total of, they had $7,000, I should say, in box 1, $3,000 from a grant in box 3, and then they paid additional just receipts that they have on their own that's not on 1098-T. Let's continue. To calculate the eligible expenses for the credit, take the $7,000, which is from the loan and the grant, plus the $500, and enter on line 1 of the worksheet above. We're going to go through this on the form as well. Plus the 500 books, blah, blah. The $3,000 will be entered on line 2A above. The line 3 amount would be $3,000. Subtracting it, then you qualify for $400. $4,500, I'm sorry, right? So I want you to review that one a couple of times to kind of get an idea of the amounts that you get for Pell Grants and such, what's being covered here. You can think of it, I suppose, another way in that, breaking it all out between loans and Pell Grants, the $4,000 loan is, of course, allowed here, and the Pell Grant is not. All right, let's continue on. Oh, sorry. The last thing is this bullet point here where it says taxpayers can claim payments that were prepaid for the academic period that begins in the first 3 months of the next year. So what happens is that oftentimes you get bills that where you prepay for an academic period in the next year. You can claim those periods that you prepaid in that year. So it's giving everybody a benefit. So if a taxpayer made a payment and prepaid for the next year that begins in, let's just say, January or February or March, and they prepaid it for that academic in 2019 that was set to begin in 2020, they can claim that as well. So there's a benefit for the institution receiving it early, as well as if you have not hit that limit, which we'll talk about in a second what those limits are here, there's a benefit to prepay that as well. So again, the American Opportunity Credit covers the first 4 years of college per eligible student. Most likely your parents are taking that. We're going to cover this on the Form 8863. It says the credit covers 100% of the first $2,000 and 25% of the second $2,000 of eligible expenses up to the amount of tax or a maximum of, this is a maximum of $2,500. On Tuesday, we talked about the difference between a refundable credit and a non-refundable credit. Remember that a refundable credit means that you can take this money, apply it, and get some type of refund. A non-refundable credit is just something that you are going to lower your tax bill with, okay? So if we're talking about the difference between non and refundable, it's a very big topic here. Non-refundable means that it lowers your tax bill, right? Does not mean that you're going to get any money back. Refundable means that you're going to get money, potentially money back. So if we're looking at the American Opportunity Tax Credit, it says here that 40% of the credit is a refundable credit. And I'm going to have you learn about how that impacts specific taxpayers while you fill out Form 8863 for homework. Now let's talk about the Lifetime Learning Credit. Again, this credit is for anybody that pays out of pocket to further their job skills. The credit is 20% of the first $10,000 of eligible expenses up to the amount of tax or a maximum of $2,000. I want you to compare that to the American Opportunity Credit. I know there's very different ways, different stipulations of what they're supposed to be used for, right? So the American Opportunity Credit, obviously, if a taxpayer has a student that's in a four-year college, they're going to want to take this one as opposed to a Lifetime Learning Credit because it's just more, $2,500 versus $2,000. Also, part of the American Opportunity Credit is refundable, whereas in a Lifetime Learning Credit, it is completely non-refundable, as you see in bullet point 2. Enrolled students or eligible students are not required to be enrolled at least half-time or in degree program. Again, and a felony drug conviction is not a disqualification. This is, again, for anybody that wants to better their skills to further their career. So again, if you want to take an Excel class, for example, do it. There's a tax credit to be able to do that. So how can you choose between the two? Obviously, if you could take the American Opportunity Credit, then you should do that. And there's really not a big difference in my eyes. I know a lot of students and taxpayers confuse these two, but to me, it just really is a layup because Lifetime Learning Credits are generally for people that don't fall in the qualifications of American Opportunity Credit. And if you look at page J9, you follow that through, it's pretty clear. So I'm going to let you read up on J9 as well as your tabled information to be able to do that. Instead, I'm going to jump out and go to the 8863, which is going to be what your homework is going to be over. And I'm just going to cover that here. It's a pretty long form. It includes both the American Opportunity Credit and the Lifetime Learning Credit, which you can see at the top. It's Form 8863. I'm going to jump over here to Schedule 3 as well. And you can see that after you fill out Form 8863, that all goes over to line 3 here of the non-refundable credits. So education credits from Form 8863. We're following down Schedule 3. We just covered credit for child and dependent care expenses, and now on line 2, and now we're on line 3. So this form has part of the first part here is for the refundable part of American Opportunity Credit. Part 2 is for the non-refundable education credits. Remember that the entire Lifetime Learning Credit is non-refundable, and part of the American Opportunity Credit is non-refundable. Lifetime learning is all non-refundable. American Opportunity Credit is broken up between refundable and non-refundable. Down here on the next page, you're going to be filling out the student name, the education, the employer identification number down here. Anytime on this form that you see the Hope Scholarship Credit, I'm going to have you read up a little bit about it. I don't expect you to understand what the Hope Scholarship Credit is, but if you were to go into this tab here, here's some additional information on that presented by the IRS. Gives you a little bit about the Hope Scholarship Credit and how you can go through that. You can Google what it is, but again, we're not really going to get into what it is. We're going to focus instead on the American Opportunity Credit and the lifetime learning. So when you're filling out your homework here and you see Hope Scholarship Credit, in other words, just ignore it mentally. Down here, you get the American Opportunity Credit and your totals for the lifetime learning credit. Okay, it's a pretty straightforward form, although long. You can see that it has your limitations in here with 20%, and then also you'll have your limitations with the 40% in this document as well. So I'm going to present to you with this homework to be able to follow through. If you have questions on it, let me know. What I'm going to ask you to do, though, is really take it to heart, meaning don't just try to fly through it. I think that you're going to learn a lot about this form if you take it and really kind of follow it through line by line, right? If you get to a specific line item and you don't know what to do with it, text me or email me. I'll be happy to answer that question, okay? So I think that's what we're going to try for these education credits this week instead of having a live session, and hopefully this will get you to where we need to be. So if you have any questions, again, let me know.